Hi, Mr. Goodman.
Hi.
Thanks for coming. Appreciate this time. Appreciate the opportunity to work with you and help you manage your money.
Sure.
So from what we spoke about, it seems like in the past you had you sold your company and you were very well financially positioned. And it seems like in the past couple of years, things have not worked out too well with your past investment strategy. So that's why you came to us. I understand that you work with a couple hedge funds as well as bases, and it doesn't seem to pan out as well as you thought it would be. And I also took a look at what your current requirements for the expenditure, and I think what our firm, Morgan Kerr, has came up with a really strong asset allocation to serve those needs. And before I go into detail, I wanted to let you know that our firm is known for our extremely high quality of customer service. So anytime you have any questions, any concerns about your portfolio asset, you can give me a call anytime, 24/7, and I'll be there for you. And secondly, I want to stress that Morgan Kerr had made the decision to not invest any of our clients' money in our products. It is to avoid the conflict of interest that is pretty prevalent among other companies, such as our major competitor, Goldman Sachs. From speaking with one of my friends who had interaction with Goldman Sachs before, it seems like there's a conflict of interest between Goldman Sachs Private Wealth division and their corporate equity research team. So when that happens, Goldman Sachs tend to prioritize their focus on their corporate side instead of on behalf of their clients. So from that perspective, I think that our firm is in the best position to protect your asset and really look after your money on your behalf. So having said that, why don't we just go into details about my recommendation for your assets?
Sure.
And it seems like you wanted to be able to maintain a pretty healthy, a pretty satisfying lifestyle for the next duration of your life. And you have 3 teenage kids who you would like to put through college. So I estimate that your expenditure per year is going to be about $1.5 million. And given your current asset, that only requires a 5% return. So I think that is definitely something that we can achieve and much more above and beyond. So we have about 1/3 of your investment in fixed income, which will make sure that nothing happens, and even with the current economic downturn. And we have about another 2/3 of that, another 1/3 of that in equity, and a 1/3 of that in more risky investments such as hedge fund and private equity. So this will allow you to this will enable you to enjoy the upside of those returns as well as protect your assets. So do you have any questions so far for me?
I'm a little concerned about how spreading my asset a third across these asset classes. Let me ask you this: what do you think the market will be, especially for the assets that are allocated in the hedge fund and the equity markets? What do you think those will value to be in a year? In 5 years, a year, maybe I'm looking to buy a boat. 5 years, I'm looking to send my kids to college. I would be able to do that?
Yeah, I think so. So the good thing about investment right now is that right now it's 2009, and the market is very depressed right now. So usually what happens is that the return of those investments after the downturn is highly significant. So the fact that we invest 2/3 of that in non-fixed income securities, I think it's the right decision for now. But when the market recovers, we can perhaps move more of that gains into fixed income and make sure that you have a steady stream of income to cover those expenses. Yeah.
Good. Do you think the market will recover?
I think the market will recover. I think there are certain industries that still have very strong fundamentals. I think. For example, international market, we still see strong growth in China, and as well as Russia and Turkey. So I think we want to make sure that you get to enjoy all the upside of those opportunities.
What about the fee structure?
The fee structure, right. So we are committed to charging on a gain per basis, but apart from that, we'll have 0.5% of, we will charge 0.5% of your total investment as a, right.
Sure. Okay, that sounds
Great.
sounds attractive. I'll think about it.
Thank you.